thanks everyone for taking the time to hear about our story here at Sovereign Metals. We are listed on the ASX under SVM and listed on the AIM market under SVML. We are looking to move our Kasia rutile project in Malawi towards development. It's a discovery we made only a few years ago. We are quite new to the AIM market, so given that, I'm hoping that the next few slides provide a little bit of an introduction to us. I think it's helpful just to give some perspective in terms of where Sovereign has come from. So Sovereign Metals has been in Malawi for the best part of the last decade, in fact since 2012. And for the first 6 or 7 years of that decade, we were looking at graphite exploration around our landholding. That culminated in us defining a project called the Malingundi Graphite Project, where we had completed a PFS on the graphite project by 2018. Interestingly, what we found when we were putting together the metallurgy reports was we were finding titanium in the tailings from the graphite, the graphite going into a bulk sampling plant, and we started to wonder, why are we finding titanium? So the two co-discoverers, our CEO Julian Stevens and our chairman Ben Stojkovic, decided to look into it in a bit more detail. So the first thing we did was basically we looked at 125 historic drill holes around our land holding in Malawi to see whether we could spot the same titanium signatures coming out. And lo and behold, we basically concluded that there is a vast amount of titanium on our land holding. The second piece of work we did was to say, okay, well, titanium usually takes two forms, rutile or ilmenite in its most natural forms. If it's ilmenite, that's nice to have, but rutile would really be something of a jackpot. So we did some work to look at what we had. Turns out it's rutile, which is great for us. So then we moved on to thinking about, well, rutile is quite an industrial mineral. It's important that the chemistry set that rutile belongs to, i.e. any other chemicals that the rutile is attached to, are such that they are low enough that someone would want to buy this rutile, i.e. is our rutile commercially viable? So we did some lab test work, which gave us an insight into the fact that not only was our rutile commercially viable, but it looked like premium rutile with no nasties, very low impurities, no critical impurities. And at that point, we thought, okay, it's about time that we begin to start figuring out just how much rutile we have at Kasia. And I'm hoping that this presentation goes into some detail around that. Listening to some of our investors, one of the key questions we seem to get first is, well, what is rutile, as Robert's also alluded to. So I'm hoping to give a bit of background on that. Natural rutile is basically the purest, highest grade form of titanium dioxide, making it the preferred feedstock for manufacturing titanium pigment. It has uses in welding and the preferred feedstock for titanium metal, which I think we're more used to understanding titanium's use in. So rutile as a pigment feedstock, well, the titanium dioxide compound shows brilliance, whiteness, an ability to cover things up, and given those characteristics, it's used within pigments for paints, plastics, for textiles, even foodstuffs, cosmetics. A few of those examples are there on that slide that you're looking at. Rutile itself as a titanium feedstock is also used extensively within the welding industry as part of the flux. So as long as we are looking to build, construct big infrastructure projects, cities, etc., there's a real need for rutile and welding. And then I think we're all more familiar with titanium as a metal, a strong, light metal that's used in aerospace. It has certain military applications, certain medical applications, such as dental implants and knee joints, and it's finding its own little niche within the clean tech industry as well. So, the base plate of a Tesla Model S is made from titanium metal to ensure that the battery doesn't explode or ignite on impact. The towers of offshore wind turbines are coated in titanium to ensure they don't corrode out at sea. So you can start to get a feel of why titanium is designated as a critical raw material by the US and the EU based on supply risk and economic importance. In terms of the size of the titanium market here, we're looking at potentially something around the $30 billion plus mark, around $25 billion per annum is attributed to the pigment industry, and about $5 billion to the titanium metals industry per annum. So you can see that rutile feeds into quite a significant titanium industry, which then feeds into a multi-billion-dollar complex of many end uses. So natural rutile is, as I said, the purest natural form of titanium. There's actually two forms of, or two feedstocks used to produce titanium and titanium dioxide, rutile and ilmenite. Rutile is found naturally at around 95% titanium dioxide. Ilmenite has a titanium dioxide content of around 50%. Because rutile is already close to pure titanium dioxide, its price in the market is significantly above that of ilmenite. Those prices that you see there, $1,350 a ton for natural rutile and $200 a ton for ilmenite, are based on quarterly contractual prices, usually put together between pigment producers and significant mineral sands producers. You can also see that outside of the contractual markets and in the spot market, natural rutile is trading well above $2,000 a ton. So it's quite a meaty quite a meaty commodity in terms of pricing. When it comes to supplying the market in 2020, 6.2 million tons of ilmenite supplied the titanium dioxide market, whereas only 500,000 tons of natural rutile supplied the market. Question is, if rutile is already 95% titanium dioxide, why aren't we mining more of that? Well, the reason is there just isn't enough of it around. It is a genuinely scarce commodity. Not only is it scarce, it's actually within structural deficit since 2017. This chart that you're seeing in front of you is the expected global rutile supply to 2030, based on existing mineral sands and other deposits that produce rutile. Rutile is actually produced as in the main produced as a byproduct of ilmenite mines around the world, apart from one dominant rutile deposit, which is the Sierra Rutile operation owned by Iluka Resources. Some of you may remember Sierra Rutile was listed on AIM up until 2016. The operations there have been working away since the 60s. Iluka Resources, which is an Australian listed mid-cap producer of rutile, acquired Sierra Rutile back in 2016. But the key takeaway from this chart is we're expecting about 70% of all rutile supply globally to come out of the market between 2017 and 2030. So that's a significant drop of around half a million tons, which equates to exactly what rutile was supplying into the market only a few years ago. Concurrently with that timeline, we're looking at an expected increase in titanium dioxide demand of 2.8 million tons during the same time. So you can see clearly there is going to be a supply deficit of natural rutile, and this hasn't really moved any further since we just haven't found any new significant standalone rutile dominant deposits over the last 50 years. Current deposits are dwindling, grades are going down, so it's really been an issue for the titanium industry in terms of where do you find the feedstock. Now, importantly, because there's not enough natural rutile, the titanium industry was prompted to create alternatives, and those alternatives were produced from upgrading ilmenite using quite energy and carbon intensive processes. So, for example, Rio Tinto produces titanium slag at 85% TiO2 at Richards Bay Minerals in South Africa. Iluka Resources produces what they term synthetic rutile out of Australia at 88% TiO2. So you can see that even from upgrading ilmenite, you're not getting the type of material that you would from natural rutile, which you find at 95% plus in the ground. That makes natural rutile or what we term a direct use material. And what does that mean in terms of ESG and our view on the increasing cost of carbon emissions in this world? Well, once we have done enough work to understand we had rutile, we approached a environmental consultancy here in the UK and asked them, if you were to take a ton of natural rutile and use that directly in a pigment production plant versus taking ilmenite, upgrading it using the energy and carbon intensive ways to produce the synthetic alternatives and use those alternatives in a pigment production plant, what would be the carbon footprint differential? And what that report concluded, fortunately for us, was that using a ton of natural rutile in the pigment production process, rather than upgrading ilmenite to a similar alternative, saves almost 3 tons of carbon dioxide per ton of natural rutile. So there's a real measurable benefit in having natural rutile. So far you have a commodity that is used in a vast array of uses, from clean tech to pigments, papers, plastics, cosmetics, even foodstuffs. You have a commodity that is genuinely scarce. Add on to that it's actually in structural deficit, and current rutile operations are running out of this material. And then on top of that, if we had enough rutile, it would actually be a huge benefit on an environmental basis. And you can see the importance of us finding a rutile discovery in Malawi. So our rutile discovery, Cassia, is not only a discovery of rutile, or the first discovery in over 50 years, but it's actually the largest undeveloped rutile deposit in the world. It sits within the top 2 rutile resources in the world, alongside Sierra Rutile, which I mentioned before. And we can quite comfortably say that we expect substantial additional resource growth over the coming months. So this green bar here you see, which is Cassia, we're expecting that to move north quite significantly over the coming weeks and months. Why can we say that with some confidence? Well, on that map there, you can see Cassia is that red zone, that red polygon. Within that, we have our indicated resource, which is the blue zone. But importantly, that teal area is the high-grade rutile zone within our land holding. So we've got 129 square kilometers of total mineralization footprint, which hosts high-grade rutile mineralization, which we know from our drilling so far. We've only managed so far in this time period to call a resource on 49 square kilometers. I say only, but at 49 square kilometers, that resource footprint is larger than Zone 1 in London. So here's our resource. Cassia is a globally significant rutile discovery with graphite byproduct. So not only do we have rutile within our resource, but we've managed to find graphite coincident with it. How much of this material do we have? We have 605 million tons of material at around 1% rutile grade, giving us around 6 million tons of rutile, alongside 7.5 million tons of graphite. We used this resource in December to announce a scoping study as we came onto AIM. That scoping study gave us some pretty robust economics. So what we saw was, if we were to mine Cassia as it stands, that resource polygon which you saw earlier, if we were to mine that over 25 years with an annual throughput of 12 million tons of material, it would produce around 120,000 tons of rutile and about 80,000 tons of graphite byproduct. In terms of economics, that meant an NPV for Cassia as it stands today, a real post-tax NPV of $861 million US, and a very robust IRR at 36% after tax. In terms of the financials, we would be looking at producing revenues on average during that life of mine of $250 million, which equates to an EBITDA of $161 million, all of that over a 25-year period, during which our capital cost of $300 million would be paid back within the first 2.5 years. So you could see that if we were to look at Cassia as it stands today, which is still only 38% of our mineralized footprint, this project would make a very significant contribution to the economy of Malawi, would create over 480 direct jobs and multiples more of indirect jobs. So why are we able to get such excellent scoping study results? Well, the first point is that the geology that we have is very, very simple to understand. All the high-grade rutile mineralization sits at surface. So on this slide, you can see a drone shot over Cassia. If you were to imagine taking the first 0.5 meters of topsoil away, what you'd be looking at and what you'd be left with is looking at the rutile mineralization itself. So the rock that hosts the rutile and the graphite, it's that close to surface. And luckily for us, not only is it close to surface, but we found that the higher grade material actually sits within the top 5 meters from surface. So this is not deep underground mining, nor is it deep pits. This is very much a blanket just sitting across that entire landholding that we have. Thanks to simple geology, we could entertain simple mining. And in this instance, we're looking at a hybrid hydro and dozer mining method, which provides significant operational flexibility. This is not new tech. This has been used for decades across Southern Africa. The reason we can use this at Cassia is because the host material is a homogeneous, soft, friable saprolite. What that means is it's not hard rock. It's not. There's no need for drilling, blasting, crushing of this material. You can see just how friable this material is in that small image there. Using hydro mining to create a slurry, which then goes into a plant, is basically step one. Step two is the processing within the plant. And what we found by putting together two distinct bulk test work programs was that we can produce premium grade rutile from conventional flow sheets. So these are the simple flow sheets that mineral sands producers around the world use, which basically take a slurry through to a wet concentration plant, which then goes through to a mineral separation plant, which uses a magnetic separation, and you're left with this final rutile product. In terms of the stats and the actual metallurgy of that rutile product, we found that we could produce rutile at recoveries of up to 100%. We were producing premium specification rutile, so rutile usually around 95% TiO2. We were getting up to 97.2% TiO2. And alongside all of this, with a graphite flotation plant for a marginal incremental capex outlay, we could be producing coarse flake high-grade graphite byproduct coming out at 96% TGC. So one of the questions we get quite often is, given the size of our deposit, is tailings going to be an issue? Is rehabilitation going to be an issue? And what we have looked at is essentially putting together progressive rehabilitation, which means that once that slurry from the hydro mining has gone through the plant and been processed, that those tailings, i.e. the material from the pit, go straight back into the pit where they were, minus of course the rutile and the graphite that we've taken out. We could then rehabilitate that pit quite quickly and return it to farmland or bushland or whatever the original use was. What that means is it minimizes disturbance. It means that we are able to return land to communities within several months rather than several decades. It ensures that at the end of our mine life, whenever that may be, that there's a very efficient closure campaign rather than a long, expensive campaign of rehabilitating huge expanses of land. And again, none of this is rocket science. It has all been done before, and there's a few images on that slide that show an example of progressive rehabilitation of a mineral sands mine in Australia. So look, we are in Malawi. Malawi is a stable, transparent jurisdiction. It's a member country of the Commonwealth. It follows British law. English is one of the key languages. It is attracting significant inward investment recently across a number of industries. And some of you may be aware of other players in Malawi, for example, Macango, who are exploring the Songwe rare earths project, Lotus Resources, who are looking to restart the Kayelekera uranium mine up in the north. So there's a demonstrable aspiration for mining coming from the Malawian government and local and national level communities. The bottom line is Malawi is landlocked, and we would not be having this conversation, or we would not be talking about CASIA if it wasn't for the excellent operating infrastructure that Malawi has. So regardless of the fact that it is landlocked, it has this Nacala logistics corridor, which connects it directly, connects Malawi, connects our project directly to the Nacala deepwater port in Mozambique. Now that Nacala logistics corridor was not there 10 years ago. It was built by Vale, the large miner, who wanted to connect their Moatize coal mine to the Nacala deepwater port. As part of the project, the Nacala logistics corridor had to go through Malawi, which allowed Malawi to have a certain capacity on the corridor line, and that capacity itself is more than enough to take any expanse of material that we're talking about here. On this slide, you can see just how close that Nacala corridor goes past our high-grade rutile zone. And on the right-hand side, you can see there's sealed roads. In fact, that sealed road has a sign for CASIA, which is only five clicks away. The Nacala logistics corridor in action there with the locomotives, and the Nacala deepwater port has more than enough infrastructure ready to be used for us to be able to get our product on a vessel at port, ready to be shipped around the world. In terms of the cost of logistics, in our scoping studies, transportation costs were based on discussions and an MOU we had with the corridor transportation authorities and the actual managers of that railway, and that came out at just over $50 a ton. When you think that rutile is in the spot markets for $2,000 a ton, you can understand that getting this out of Malawi and onto a boat is not an issue. So in summary, we've termed this quite an exciting year ahead in terms of what we're hoping to put out there as news flow begins to materialize. So I think over this coming quarter and over this half of the year, we're going to see a revised life cycle assessment. What that is when we looked at the saving of carbon dioxide emissions from natural rutile, that was a hypothetical taking natural rutile into a pigment production plant versus ilmenite and taking that into a pigment production plant post-upgrade. Our revised life cycle assessment will say, well, if you were to take the rutile at CASIA, you were to mine this and process this rutile mineralization and produce rutile as per our scoping study, and then that was used in some end form of rutile use, what would be the carbon savings from doing that versus what the titanium industry is having to do right now? So we're expecting that to be announced in Q1. As I alluded to, we're expecting a substantial JORC resource tonnage increase this half of the year. Alongside that, we will then use that resource to update our scoping study. So you can expect our initial scoping study was in December. We'll have an updated scoping study mid-year this year. And after that, we'll then commence on our pre-feasibility study. During that time, obviously, we will continue exploration across our mineralized footprint, and interestingly for us, and we're looking at the potential execution of MOUs with future rutile off-takers to really validate our product. Just a quick note on capital structure. So we've got a current market cap of around just over $100 million. We've got around $4 million of cash as of December. we did a £1 million liquidity raise as we entered the AIM market. That's not shown in the 3.7 million Aussie dollars you see there on the screen. So that's an additional 1.9 Australian dollars to add into the mix there. Our register is about 15 to 20% would be directors, vendors, insiders. Institutional investors make around another 20%. One of the largest holders there is Sprott, who came in quite early doors. And then we've got around 40% of the register is actually European based. So German and slowly we're seeing quite an uptake in the UK as well, as we've recently listed on AIM. And I'm hoping that gives you a introduction or a sovereign metals 101.
Excellent, Stefan. Thank you. That was very comprehensive and very, very interesting. You'll have seen the questions have been flying through as you were speaking, or maybe you weren't. Maybe you were paying that much attention to it that you missed them. But either way, I'll be putting them to you, putting some of those questions to you now, if you don't mind. So one of the first questions to come through, you spoke about the scarcity of rutile, how useful it is in industries like aerospace. Does it have any kind of established substitutes?
Well, look, so of course, rutile, it's not a new commodity. It's been around forever, and it has been used within the titanium industry. What made the titanium industry, or what prompted the titanium industry to start looking at synthetic rutile and look at creating titania slag was effectively, you saw from the first slide just the vast array of uses that we have for titanium and titanium dioxide. I don't think many people were aware that the white wall that they're looking at is white because of titanium dioxide. Your car is a brilliant color because of titanium dioxide. The toothpaste that we all use to brush our teeth every night because we're all good boys and girls it has titanium dioxide. Even food these days has titanium dioxide in it. So you can see that there's a huge, vast array as other industries, as end-use industries increase over time. There was a need for the mining world or the feedstock world to be able to provide the supply. So when it comes down to it, we were looking at using ilmenite and upgrading ilmenite in order to get something close to rutile, which otherwise would just flow off as a small byproduct of ilmenite. Apart from the one major deposit in the world up until now, which was Sierra Rutile in Sierra Leone, which has been in production since the 60s. And is owned by Iluka Resources. But again, that's only supplying about 150,000 tons into a market demanding at least 500,000 tons of rutile and over 7 million tons of actual titanium feedstock.
But that demand, that kind of, that you're talking about there, are there other perhaps inferior places, minerals they can use to get the results that they do with rutile? I think that's what the question was getting at.
No. Look, I think the bottom line is that rutile has certain specificities. That means that, for example, in the welding industry, where they actually pay a premium if you're able to provide natural rutile, a premium above spot prices for the flux, they are. You can't use a substitute in those type of industries. Those substitutes exist in the form of the upgraded types of substitutes, but as we move towards a more environmentally conscious world, one where not only is the cost of carbon a environmental social thing, but is a true financial cost to companies now, it's only normal that you would want them to find the most low carbon option within their supply chain.
And in terms of ESG, there's some questions come through about the usage of water in the mining process. A specific question about how much water does it take to mine 1 ton of rutile, and then I think there was also the question of what the supply is like for that water where you are.
So I can answer this on a bigger scale, which is our scoping study assumed that we build a freshwater dam. That dam would be filled with, thanks to the rainy season within Malawi. So December to March is usually a rainy season. That dam would use or hold 9 gigaliters of water and fresh water. And we'd be using that for our mining operations. Now, interestingly, it would be within a closed loop system. So what that means is we are not using fresh water, dirtying that fresh water or contaminating it and then releasing that back into the freshwater world. It's a closed loop. Once we just need a finite amount of water, and we'll continue using that water within our project without any further requirement.
And you spoke about at the end, I think you spoke about the users, so the people that you're going to be selling. And I think you did, just after this question came in, you mentioned that you're trying to get some agreements in place. So this question had just come in a little bit before that. So perhaps you could just return to that topic, because the question is asked, which sale agreements do you have in place at the moment with end product users, or what does the pipeline look like potentially?
So look, obviously I can't, there's no sale agreements out there at the moment. If they were, we would have announced them. But what I can say is, given that we found the first real significant rutile deposit on the planet within 50 years, you can imagine that anyone within touching distance of the industry has been in touch with us, has requested information from us, may have wanted to test our product, etc., etc. So look, we're in discussions with all relevant parties at all times.
Excellent. And what's the timeline? Question asked, do you have a rough timeline of development right through from production, to the point when you're profitable and you're generating revenue? So what timeframes are you keeping in mind at the moment? Are there sort of different kind of optimistic case, pessimistic case? What's happening at the moment?
Yeah, look, I think we have a timeline in mind. What I would say is, despite the fact that this project looks so big, it gives off an air of being quite advanced when it's not. We're still at the scoping study stage. We've only put a resource out on 38% of the mineralized area. So our next steps would be to see what a larger resource would look like if we mined that on scoping study parameters. So there's a lot of work we need to do this year, feed that into a PFS towards the end of the year, probably look to do a BFS next year with a construction decision towards kind of end of 2023, beginning of 24. So we're really looking at profitability or cash flow, I should say, if you assume a 2-year build around 2026.
Excellent. And at the end, you gave us a breakdown of some of the investors you've got at the moment. I'm just going to get that up again to make sure I'm looking at the correct one. So the breakdown here. So you've got around 17% from institutional investors. At what stage of the project I think you said Sprott came on quite early on? Have you had a kind of continuous? I know there aren't that many of them out there, but have you had more coming on since then? What's the pipeline been like?
Yeah, look, those institutional investors have come in on both the last, not the last raise, but the raises before then that we had done, which were at around very early stage, a couple of $1 million at 9 cents. We then moved on to doing one at 40 cents, which is closer to where we are today. And a lot of those, a handful of those institutional investors have been buying on market as well. I mean, it's some of them have passed certain hurdles, so you can see it all in our on our announcements on our website.
Excellent, great. Well, thank you very much. I think that was really useful, and there's been some good feedback there as well. I think one of the viewers has just said, excellent presentation, very compelling numbers. So yeah, it sounds like I don't know if we did a poll actually, but it sounds like at least someone was convinced that it might be for them. So yeah, excellent. Thank you everyone for your questions, and Sapan, thanks for taking us through them with some quite detailed answers. That was really excellent.
Thanks, Robert. Thanks everyone.